Big banks versus Ripple XRP. Folks, it's becoming so clear now. Not only did they weaponize the SEC, make sure that their buddies and incumbents were going to be protected, and they went after Ripple, they went after us, but now we're starting to see the biggest banks in the world. The news coming out today that Citi is also looking at basically tokenized deposits, some smart contract capabilities, and essentially just letting us know that it is all moving to blockchain technology on the back end. So let's get right on into this update, folks. I appreciate everyone. I just wanted to let everyone know before we get into it, we're running the special. When you pay for your annual membership or the Patreon Discord group, you can save 13% off. We just have been running that special over the last week. So if you're looking to take advantage of that while we have it available, it is over at my website, zachrector.com. With that being said, let's get right on into the update, folks. The cryptocurrency market was back up above 27,000. Briefly coming back down 26,800 at the time of this recording, 1,600 for our Ethereum and XRP, back at 50.5 cents. Now, when we look here at Bitcoin on the daily chart, kind of zoomed out, we've been watching this thing trend between 31,000 and essentially 25,000. If we break 25K, look out below, folks. I mean, there is not much room here between 25K and those lower 20s. And this is going to liquidate a lot of folks during this bear market recession. It's already getting tough. And I warned about this little pump up, put out the prediction. They were going to get a bull trap rally leading up into the Fed's decision. That's going to come in on Wednesday, September 20th, is going to be the Fed decision on interest rates. I believe that they're going to raise rates once again. The market is pumping in, pricing in a pause. That's going to be a fatal mistake, and we're going to roll back over. And let's watch that 25K level, the most critical, big psychological number as well. And so we'll be watching that one very closely. I'll keep you guys updated on that as the market moves. Now we get on into the current events to start out here. Apparently, it looks like Donald Trump is going to be skipping the second GOP debate to speak to striking auto workers in Detroit, per CNBC. So it looks like Trump has no interest in debating these folks. To be fair, he is not close to any of these in the polls. Any of the competitors, the folks running against him, they are not even close to him in the polls, to be fair. Now, I would love to see Trump in some more debates. I love healthy debate as an American citizen who believes in the First Amendment and believes that we need to start holding people accountable, and we shouldn't be scared to share our opinion, share how we feel, share a program to maybe get something done. I'd like to see that conversation, but I understand why Trump's not interested. There really is no competition out there for him. And I'll be interested to see, his speech here to these striking auto workers in Detroit, to see what he has for a solution in regards to that, because it's the striking auto workers is a serious concern. It could impact supply chain, as we were just starting to recover from all the supply chain issues that we had. We get the striking workers here that could bring strain back to the supply chain, and you know what that's going to do to inflation as well. Now we continue on and we see that the United States, for the first time in history, has crossed the $33 trillion mark for our U.S. federal debt. Please remember that this does not include the over $100 trillion of unfunded liabilities, Social Security, Medicare, and others. That is not included in this $33 trillion U.S. federal debt number. So we find ourselves, well over $150 trillion in total debt. From what we can find. Who knows what other money they've been hiding from us and have lost. It's nothing for them to lose $1 trillion. But with that being said, since the debt ceiling crisis, the U.S. has added $1 trillion in debt per month. So since they removed the debt ceiling, remember that, just not too long ago, they removed the debt ceiling. We have no limit now. We have added $1 trillion in debt per month. Over the last 5 years, the U.S. has added a total of $11.5 trillion in debt. Just within the last 5 years, folks, we've added about a third of this debt. At the same time, we are on track for $1 trillion in annual interest expense. Just the debt service cost is going to be over $1 trillion this year. Interest will soon be the U.S. government's biggest expense. How can this end well? It won't. But according to Janet Yellen, she has said that there's no signs that the U.S. economy is in a downturn. How about that, folks? And it's just like we've been saying, Biden's going to be touting Bidenomics, the strongest economy ever. Janet, no telling Yellen, she's going to come up here and say her piece about there's no signs that the U.S. economy is in a downturn. Meanwhile, it's absolute bloodshed and carnage coming to Main Street, already arriving at Main Street, and to the broader stock market and equities markets and the broader financial market as a whole, real estate asset class lagging. It's going to get even worse. But no telling Yellen coming to make a stand and tell you what's taking place. No reason to worry, even though the U.S. has added 600,000 barrels to the Strategic Petroleum Reserve just in this last week. And the problem is that we closed the week over $90 per barrel this last week. Now, they were trying to fill back up the Strategic Petroleum Reserve at $67 to $70 per barrel, and the OPEC Saudi Arabia group is laughing at us as they continue to cut production, continue to bring pain to America, and continue to make us fill back up the SPR at over $80 per barrel, now over $90 per barrel on the weekly close is what we just got. And we are still 269 million barrels away from being replenished to the levels that we were at. In other words, inventories are still at their lowest level since 1983. However, reserves are running so low that refilling them 30% above the target price zone may become a reality. It's the classic sell high, buy higher. And this is not good. And what do you think this does to inflation, right? They dumped our Strategic Petroleum Reserve to tame inflation. And we had a strong dollar, and they were dumping our Strategic Petroleum Reserve on us, and that's what was bringing inflation down. Now we're out of basically fuel, right? And now we're having to fill it back up. God forbid we actually go to war. God forbid we actually have a real crisis. The inflation that we've experienced so far is nothing compared to what's coming. Meanwhile, talking head Paul Krugman's telling us that the Fed has won the fight against inflation. Janet no telling Yellen saying that there's no sign of a downturn when they're about to kill us. Metaphorically speaking, financially speaking, they're about to kill us. And inflation, it has not been won by the Fed. It bottomed out and it's on its way back up. It's like a stock that's pumping. We had a little pullback in inflation. It's a chance to buy the dip before we send it higher. In this case, it's inflation. That's the real technical dynamics that are at play right now with inflation. And that's why I think that Jerome Powell is going to raise rates here on Wednesday's decision. I think he's going to give us another 25 basis point hike. He doesn't care about bringing pain to the American people. If that's the sacrifice that has to be made to tame inflation, that's what's going to be done. Now we roll on into the crypto update, folks. Take a look here. We're getting a little update on the SEC Binance case. And the SEC says that the Binance US audit found it very difficult to ensure the company was fully collateralized. Now, we've been talking about this, not your keys, not your crypto. You got to get your crypto off these exchanges if you want to make sure it's secure, if you don't want that exposure, that third, counterparty risk from these exchanges, which are proven time and time again that they're not fully collateralized, that they're playing around with your funds, that you might not have your crypto on your platform anymore that you think you do. And so we've been talking, we use these exchanges. I love Uphold. If you want to go buy some XRP, we can still go buy some Uphold XRP. We can get it from a few other exchanges as well. We use these exchanges. We conduct our business transaction, and then we get our crypto the heck off of it. And we've been talking about this. And there's much suspicion going around right now that you're also going to see the Department of Justice, FBI, involved in this case as well. This is not just going to be a case with the SEC and breaking the securities laws. There's going to be fraud. There's going to be some serious crimes that they're going to be taking a look at. And we'll let Binance have their day in court, right? Innocent until proven guilty. This audit, not looking good. And our suspicions being confirmed. And our worries, and concerns about these exchanges being 100% vindicated. Now, when we talk about the big banks coming after Ripple, coming after XRP, they tried to stall us up. They tried to stop us. They have failed. But now we get the admittance that they are 100% interested and invested in DLT technology. We get the news out of Citi that they have unveiled Citi Token Services pilots. Includes tokenized deposits plus smart contract bank guarantees. This is separate from the regulated liability network. These firms are going all in. And we move on over to Digital Asset Investor. He says, what a coincidence They have both been working on tokens while Ripple has been tied up in an SEC lawsuit. Wild. Isn't it funny how that works? JP Morgan looking for digital tokens for cross-border payments and settlement. Citigroup looking for customer deposits. And it's basically the same thing. They're both looking at tokenized deposits. So essentially just tokenizing your deposit in the walled garden at JP Morgan or Citibank. Once again, you are going to need that interoperability between the two. And that's where our XRP comes in. And you see this post here from Cowboy Crypto. Brad Greenhouse says, to really boil it down, Ripple is competing with the liquidity of Citi and the messaging of Swift in one, because we are both messaging and liquidity. That's the difference between XRP and the liquidity at Citi. That's cool. And then you got the messaging of Swift. Now, when you combine both those into one product, one offering, and the best liquidity in the world, you find yourself at the XRP ledger. And if you need some help using it, then we have our good friends at Ripple. Now, what's so interesting, though, this is confirming once again that they are interested, that they have made their investments, and that they're 100% moving to a tokenized world. But what's interesting to see this confirming that's fantastic. But it also confirms that they've been sitting at the table with Ripple, just like we said, 15 senior executives from JP Morgan going to sit down with Ripple. And then we also have a connection here with Metaco and Ripple, and Metaco partnering up here with Citi just last year. This is posted by Citigroup.com. This is from Citi themselves. Partnering up with Metaco. Folks have been making fun of me for saying that. I'm making fun of their name by calling it Metaco. I understand it's Metaco, to develop institutional digital asset custody capabilities. This was announced in June of last year. And they were working on them. Right here it says Metaco's technology and digital solutions with Citi's expansive custody network to develop a platform to enable clients to store and settle digital assets seamlessly and securely. Citi intends to fully integrate Metaco's bank-grade digital asset custody and orchestration platform, harmonize into its existing infrastructure to develop and pilot digital asset custody capabilities. So it's all about custody, right? We move on over, though, and we see that it looks like Citigroup is reviewing and may have canceled. Some reports say that they actually canceled the partnership with Metaco. And this came out after the news that Ripple bought Metaco for $250 million. Citigroup is reviewing its digital asset custody partnership with Swiss fintech firm Metaco and has started informal talks with other providers, people with knowledge of the matter said. And now we see it come full circle. They were working on their own solution. And this is what they've been doing. Of course, they show up to the offices of Ripple, probably tried to strong arm them into giving them a lot of XRP, trying to figure out how to use their tech. They launched JPM coin. It's a complete failure. Nobody cares. Nobody wants to use JPM coin. In the case of Citigroup, they work with Metaco, work with them for a year, figure out how to do this deal. Now it looks like they're going to be working on their own platform. And whether or not that partnership is still going on, I cannot confirm. I'll look into it a little bit further. But once again, it shows us that all roads do lead back to Ripple. And with the Ethereum whistleblower that we have now, we can confirm that not only are they interested in DLT, but we can see what they did to try to stall up and stop Ripple and XRP as well. Now, this story with this Ethereum whistleblower is straight out of a movie. I just put out a tweet saying that it reminds me of the show Blacklist. And what I'm talking about is this right here. Mr. Hubert showing some of the court documents that came from this. I guess it wasn't a settlement, but they dropped the charges. Basically dropped the charges here against this guy, Steven Narioff, who's the Ethereum whistleblower, absolutely dropping bombshells in regards to this. But if you go look up into these court documents here that Mr. Huber shared, Narioff's lawyers say their client was put in a van on the day of his arrest and given a clipboard with a list of names of hundreds of top players in the crypto industry, from Ethereum founder Vitalik Buterin to Caitlin Long, the founder and CEO of Custdia Bank, and instructed to give the FBI dirt that would help make them dozens of convictions in exchange for a lighter sentence. In dismissing the case, Judge Brody, so once again, they did dismiss the case. They dropped the charges and dismissed the case. Judge Brody denied Narioff's motion to compel the government to turn over more evidence and records, including the minutes of the grand jury proceedings, and H Ladies, I don't know how to pronounce that, what's going on here. H Ladies communications with the investigating agent, making it unlikely that the public will ever see the evidence that could back up Naryov's claims that he was set up. So it looks like we might not ever get this. But even without evidence to back off Naryov's claims, the fact that the government dropped their case against him after his explosive allegations certainly invites speculation. Like I said, this sounds like this is straight out of a movie. Reminds me of the show Blacklist, right? Where the government comes in and they say, hey, this is what we have on you. If you ever want to see the light of day and you don't want to be behind bars for, 10, 20 plus years, you're going to start talking. And here's a list of names, by the way, that we'd like you to speak on. And who knows what Stephen, let go? We're hopefully going to find out. His lawyer is actually even continuing to add to the evidence too. Michael Scotto is his lawyer that represented Steven Naryov in this. And he's responding, right? This is Mr. Huber's tweet that I just showed you guys. He's responding, and this, and he's sharing more of the documents. And he shares another one. This is a pretty good page too, lest anyone get the wrong idea about what actually happened. And so Michael Scotto here, speaking out on behalf of his client, Steven Naryov, and this thing is getting absolutely blown wide open. It's truly incredible. And I wanted to share this with you guys as well. I put out this tweet, and I think that this is the move that we have to make. This is critical. And the time is against us. The clock is ticking, and we need to protect Steven Naryov at all cost. But I put out this tweet, and I said, sounds like it's time to move. We need a deposition on the record from Steven Naryov ASAP. And I tagged his lawyer, and I also tagged John Deaton. And John Deaton had shown some interest that he wanted to get Steven on his show. That's fantastic. But I think even better is we need to get a formal deposition on the record from Steven Naryov. What happened? What's your side of the story? Bring your lawyer. Have him present. Please have your lawyer present. But let's talk about this. Let's share. Not just in a podcast setting, in a formal on-the-record deposition that we can use when we go to make our claims against the SEC and the United States government in the criminal conspiracy, the operation that was launched against us, the attack, not just against Ripple, but against the XRP community as well. We have the facts on our side, and the good guys and gals are going to win, but the damages are absolutely massive. And so that's why we've been busting back out the red folder. That's why I'm shouting from the top here that we need to move quickly. John Deaton, other lawyers, XRP community, we have to continue applying pressure. I sent a open letter, a Twitter post, but it was penned to Bill Huizenga, one of the politicians that follows me in our United States government. And here you go, Bill. Here's the bombshell. Let's move. This is the financial story of the century. We have the timeline. We have the facts. We have the maps. We have an Ethereum whistleblower who's ready to expose it all. And I don't know what all he's going to be allowed to share. I hope that he, seeks the counsel of his lawyer and he can tell us a lot. I'd love to hear the full story, but not just in a podcast setting. Let's get a formal deposition and let's get ready to roll, folks, because the damages are absolutely massive. And this puts the ball back in our court and allows us to continue applying pressure like never before, not just against the SEC, not just bringing public awareness to the lawsuit against Ripple, against Brad and Chris, and the including of us in the lawsuit as well. Thank God we've been vindicated by Judge Torres as the understanding now, the law of the land. The XRP in and of itself is not a security, but we're not done. Just today, I saw the news that the New York Department of Financial Services removed XRP from their list of compliant tokens according to New York's new regulations compliance list. And this is the list, the compliance that you need to have if you want to be listed on exchanges in New York. And they removed XRP from that list, which is a complete political move. Just completely siding with their friends at the SEC. Because we just had a judge in the Southern District of New York, by the way, who ruled that XRP in and of itself is not a security. So how could it not be compliant? It's completely open source, decentralized, and is one of the most sound, structurally built, fundamentally built cryptocurrencies available. How could it not be in compliance? Well, once again, it's just more proof, more evidence that they weaponized, they came after us, but they didn't understand how much of a fight we were going to put up. They didn't understand how much of this we were going to uncover. And this is why, in my humble opinion, I believe that the SEC is going to be forced to settle up, to wrap this thing up before we continue to expose them further. And if they want to keep on playing this game, then we get to bring, it's not just Brad and Chris and the Ripple lawyers bringing this guy to the stand in a trial, but outside of that, when the XRP community goes to seek damages to go make a claim, we go get Steven on a formal deposition. The ball's back in our court and we're in control, just like it was intended to be. The American people being able to use a currency how they see fit, without a cloud on title from the government making claims that were absolutely false, making a case that they knew that they couldn't win, but they launched it anyways because they wanted to save time for JP Morgan, for Citibank to work on their little deposit tokens and their little cute pet projects that nobody cares about. And it's not the real solution that is the neutral reserve bridge, the neutral bridge currency that is XRP. Doesn't matter, JPM, Citicoin, Goldman Sachs coin. Nobody cares, nobody wants to use it. Okay, you're going to tokenize my deposits on the back end. That's fantastic. You still need interoperability, i.e. a bridge currency. And if you guys didn't check out the video that I just did, I put out one. It was titled Saving America with XRP and Gold. Make sure you guys go check that out. And we got some more additional content coming on the way. So make sure you guys have subscribed. Hit that notification bell. And if you appreciate this update, I'm feeling the energy and passions back in me. I understand we're in a bear market. I don't even look at the charts anymore, really, because I'm not actively trading right now. There's just too much risk. There's too much that I don't want to be exposed to. I don't trust any of these exchanges. I don't trust anybody right now in the crypto space besides Ripple, essentially. And so I'm not trading this thing, but we're watching this market closely. I got some more updates on the way. Make sure you guys stay tapped in with us. And if you appreciate what we're doing here, we appreciate you guys smashing that thumbs up. On the way out, you guys can head to my website if you have any further questions, and I'll see you in the next one. God bless.